Hello, hello. We are back with episode 10 of Learn TA with Landy. Landy's going to tell us how to analyze choppy markets today. How are you today, Landy?
I'm doing well. And yourself, Peace?
I'm doing really good. I've actually was down with a bronchial infection for like the last 10 days. So I'm feeling a lot better after all of that.
Well, I'm glad to hear you're doing better. Look, I've been absent for a little while. We took a little break. Part of that is because, well, we've talked a lot about kind of how to analyze markets, and needed the audience to kind of digest all of the stuff that we've kind of covered in this series. And of course, a lot of holidays in between. So, and now we're at a time in markets where people are unsure. They're fearful of potential downside. Meanwhile, market has just kind of been going sideways. Now, some markets have been going sideways within a much more volatile range, that being altcoins. But it is still Bitcoin season. So we're going to take a look at Bitcoin today. We're going to kind of analyze the range and this kind of sideways chop when looking at some of the higher term timeframes, and kind of revisit how to break things down on the daily and maybe even some lower term timeframes to start getting some clear idea of what the criteria is, what conditions need to be met for additional downside outside of this chop, so in a trending move, or to the upside outside of this chop in a trending move. So we'll cover that today. Won't be a big one either.
No, it won't be too long.
No, this is fairly simple stuff, and it's just building on what we've talked about prior.
Very cool, because I don't know if you're aware of this, but our good friends Reese and GPSC have taken over the Art on Stack show, which comes on in just under an hour at 2 p.m. Eastern time. So we want to make sure that we're done in time to make sure that we can get our audience over to tune into their show.
Awesome. Well, we'll do. This one's going to be fairly straightforward. It's actually much easier when we are just simply defining the criteria. So we'll get through to that. So whenever you're ready, you can throw the chart up there and we can just kind of run through it.
All right, let's do it. I'm excited about this one. Let's put us down here, make the chart bigger. Is that okay?
Yeah. You can maybe if you can move us over to the left so people can see the price scale.
We might not be. Actually, it's okay if we just maximize this.
Oh, that's fine. Either way. So obviously this is Bitcoin. Bitcoin is in a pretty big volatile range. We've broken this range down a lot. For those of you that watch my videos Monday, Wednesday, Friday, you know the range pretty well, right? We've got the bottom side here at the lows here coming in somewhere around $92,000 to on the close here, where we have the first set of highs that started to come in as price kind of paused after a big expansion up. And then we had a nice close open and a retest of this little consolidation before the next move up. And that's around $92,000. And then we have even a nice higher low to reference right there, right around 88,700. And, just kind of going through and logically breaking this range down as I move things around to the proper areas. One of the main reasons why I've gotten some questions. Why do I pick this low wick right here and not the candle body close opens here? The main reason that I picked the low wick here is because we had the sideways kind of chop, and zooming out from the prior bigger trending move, we had a compression of volatility right around the highs of the prior range, right? And then we had this volatility expansion on this move up. We had our first big red day. This was an important day, put in a low at 85. And of course, we saw price kind of chop sideways, and then we got a higher low swing. So we got a swing higher high to a swing higher low. So right in this little area here, if we can zoom in, we actually, had some important price structure being built here. So we had the swing higher high to the swing higher low, and then a swing higher high, swing higher low. But why is this area relevant on the close open? Well, between this swing and this swing here, we could call that area out and only call that area out. But what we started to see is as price continued to rise, we were, of course, updating our criteria. this was a zone, this was a zone, and these were their own separate zones of support. So initially, when building this range out on the way up, we had like this as an area of interest on this low, and we'll get rid of we don't really care about what the price targets are. I can always just tell you what they are. They don't matter as much as what I'm going to show you here. But we had on the way up, we had these zones, right, that were being built, and this was just a higher low, close to swing, higher low, close to swing, and it only really mattered when we started to see this lower high come in. So we had this continuous expansion to the upside here. We had a retest of the little consolidation here, and then a bounce up to a lower high on a closing basis. And then we have to start looking at the last higher low and then the higher low previous. And it just so happened that the last higher low was lining up very nicely with this consolidation high. Of course, not taking into account the actual swing high up here, although that was an area that was marked at that particular time. But since then, on the bottom side of the range, we've been going sideways, and it just so happens to have tested these areas multiple times to the downside. So we had the original lows set. We had the December 5th candle that tested down here. We had the 20th candle, and then we got front run above this higher low structure here. We dip into it to test this higher low between the close open and the swing. Test it again, shoot down to it. Where do things end up? Right at that previous higher low to this guy here. So we had essentially, 92,000 here on the close open to the swing at 90,006 to 700. And then just below that, we have an 89,000, roughly $90,000 close open to that 88,700. And that's defining really clearly the bottom side of this range, right? Into the top side, we had the same kind of stuff. We had the first high that was put in, and you can see that if we were to mark this out and kind of break down the structure again, we can kind of mark that out and see, just kind of looking across even the swing. I like to take the close opens as well because they are important on the daily closes, but just even looking at the swing, you can see how price cut through it to the top side, closed below, closed right on it for 2 candles, pushed above it, dumped below it when it lost it, put in a nice higher low here, and then pushed above it, sat on it for 2 candles, and then pushed up to new highs, right? Loses it, comes down to the support, finds this area as resistance, comes down to the support area, gets front run, finds the area as resistance. This is right around $100,000, or just shy of $100,000 at 99,860, right? Finds it as direct resistance, dips down into support, deviate, dip down to support. So one of the big things that we're seeing now is, of course, well, every time it's testing areas of resistance and support and going sideways and not trending, continuing its trend to the upside or reversing trend to the downside outside of the range, we have a choppy market. We have a sideways market. We have crabby price action. So a lot of traders, you'll see them post the crab emoji. It's just kind of crabbing sideways.
Okay.
Yeah, that's what crab markets are, right? It's a sideways market. It's a choppy market. It's a consolidation is really what it is. And essentially what this is doing is we're seeing price consolidate for a wider move. And I have been referencing this in my recorded videos Monday, Wednesday, and Friday. And more recently, I've started to reference this as of last week is the 5-day time frame, because it's the 5-day time frame can kind of give us a good leading indicator for what things might look like on the weekly. And you can see very clearly this is a choppy market, sideways market, consolidation on the 5-day. And in fact, from everything that we've been talking about, one of the more interesting things is, we are seeing now that we had this big accumulation structure for 6 months or more. Coming out of that, we had the big expansion, and now we're back into a compression. So we're in a relatively low volatility period on the 5-day. That is starting to bleed into the weekly. We're starting to see compression on the weekly as well. And on a higher term time frame like the 5-day, that allows us to get an edge for what might be happening on the weekly. We can see that the 5-day is nice and compressed, and we see the bands coming together for volatility compression. We see low volatility metrics on the weekly as well, but this is still kind of cooking, right? Still, we're kind of, the bands are still pretty far apart from price action, which does mean that if we were to see moves on the 5-day in this choppy market that start to get expansion to the downside, we have to mark and check where things are on the weekly. So if we were to come over to the weekly, when we're looking at this kind of choppy consolidation in markets, we can mark out where things are important volatility levels on the weekly here. And I'm going to show you how we can reference what's going on in the 5-day to help us analyze this choppy period in the markets. And in fact, we'll even go all the way down here. What I'm doing is I'm marking the volatility levels so that we can reference these volatility levels from the weekly as it relates to the 5-day. Because when we're moving from expansion into compression, typically the levels of volatility or the areas of interest for volatility for the higher term timeframes will become more relevant to those lower term timeframes. So what does that mean? That means that this weekly, these particular levels for volatility are going to be very important to look at as confirmation criteria to the downside and upside when we're looking at a 5-day to try to get a read on the weekly. So if we go to the 5-day and we look at this and we say, okay, we have confluence between one of the major levels on the weekly. This happens to be the basis band or the 20 simple moving average. So we can even say 20 SMA and put a W there for weekly, right? So that's an important level. We can also say that this is the lower first. So I'll say L1, put a W there for the weekly. And this is an exercise that I encourage people to do because now we're moving from lower term timeframes to higher term timeframes. We are seeing how some of these higher term timeframes fit together. And then when we go down to the daily, we'll get extra context for what's really important in the range. We'll go down here and we'll say this is the L2 because this was the lower second standard deviation away from the 20 simple. And then we've got the upper first or U1 on the weekly. We've got the U2 on the weekly. And pretty soon we'll have this all wrapped up with the U3 up here. And this is pretty simple stuff now. Now we have a reference and we can look at where we have confluence. The lower second standard deviation of volatility here away from the basis band or 20 simple on the 5-day is right where the 20 simple is on the weekly. Meaning that if Bitcoin were to start closing below here and meeting the additional criteria of closing below the low wicks of this 5-day period, which is at 88,700, we can take and define that right here with a little white line. So we have two criteria right now. We start seeing the 5-day close below the lower second here at 90,400. And then additionally, we start seeing breakdowns below 88,700. We would be initiating expansion to the downside that could result in a trending move. And where would the areas of interest be? Well, at first, probably a price moving, quickly will expand the bands down, but wherever the lower third is, maybe that lines up with our daily $85,000. This is right around 86.6 or so, or just below 86.6. And if price were to begin expanding down during this 5-day time frame, it's likely that this will stretch out to expand down to around $85,000, which would be a daily level of interest from the move up, and kind of the last line of resort for the bulls in terms of an area of interest where price got picked up on the way up. With more expansion on 5-day closures, we could then start to entertain around $78,000 by the weekly lower first, right? And then subsequently, now this criteria, of course, will update week to week. The bands on the volatility levels of interest are compressing. So next week, if price still hangs out in this range, this will likely move up, as will this other one down here. This lower second will likely move up. All right, continued expansion past this level on the weekly would likely come down to somewhere around the lower second on the weekly, which is kind of in the $65,000 range. But again, if price hangs out sideways for the rest of this week, we'll likely see this, maybe it's at 70,000. Maybe the lower first is at 80. But we just track it week to week at this point. It gives us a nice reference during this weekly candle. And the 5-day is a good reference for compression into expansion that could give us areas of interest as it relates to the weekly to kind of save us from this chop and getting prematurely, if I start seeing this breaking down, a lot of people are going to go, oh, well, I'm going to long because it's heading down, right? Or I'm going to go in and I'm going to buy here. And then if it continues down, they get washed out of their positions, or they get scared and they sell, and I'm going to buy back lower. And they have no reference for where they're going to be doing these things. Same goes for the upside here. If we start to see the 5-day closing candles back above 101,500, we have the upper first. That's the upper first on the 5-day. We have another area of interest right over top at 103,400. Now, and if we were going to see price continue to head that way, we wouldn't really see extreme measurements in volatility until we start seeing the 5-day close above the upper second, which is 105. And this just happens to be right across the highs here, just slightly above the close open here at 104,750. For this upper second, if we start to see price closing above there, then of course we need to see the additional criteria of price closing above the actual all-time high here to get continuation of volatility expansion to the upside outside of this range or outside of this chop. So we would need to see two criteria met. We would need to see the upper second and the high get closed above on a 5-day period. That also happens to be where the upper third is right where the all-time high is, or just around there at 109,400 to 500. If we were to start to see closures above there on the 5-day, we would then look to where is the next area of interest for a higher term time frame like a weekly, because we would be getting volatility expansion outside of the highs. Where would we start to look? Upper second, right around $115,000. In this case, it's still compressing. It's at closer to 116, but it might be at 115. Maybe next week it's at 112 if Bitcoin continues sideways. And then above there, we would look for the reference for the next big area. That's the upper third right there at 128,675. This also happens to be a major Fibonacci level, the 1414 from the bear market, the bull market to bear market fib extensions that we did quite a few videos ago and that we reference a lot and is typically on my charts. Not really relevant to this right now, but how do we extrapolate that down to the daily now? Now, if we were to take a look at the daily, so we've gone from the weekly defining some criteria to the 5-day defining criteria on the 5-day, right?
Sorry, hold on a second. That was my...
It's all good.
I was trying to get rid of that... QR code.
Oh, it's all good.
Just because I couldn't read that one number that was like 120 whatever.
Oh, it was 128,000. 128,675. If we were gonna, that's the normal fib. That's a 404. It just has confluence with it right now. The 1414 fib extension. I don't have it on the screen here, but the upper third on the weekly is lining up with that perfectly. But now that we understand the weekly and the 5 days it relates to the weekly. So the 5 days is going to become very important. It could give us an edge as to where it's closing on where the weekly areas of interest are going to be to the upside or downside. Now, when we bring that down to a daily and we look at where things are, the yellow is where the weekly areas of interest are, and the white lines here are where the 5-day areas of interest are. And they are already daily areas of interest, right? We have, again, our first big high or low after putting in the swing high and going sideways at 88,700. And then, of course, we have our all-time high up here at the 109,360. On some charts, it's 109,400 to 500. Now, one of the things that we can do is we can say, okay, where's the 5-day areas of interest as it relates to this compressing range that the 5-day is in? Like if we wanted to really kind of pick out like, okay, well, we already know that the lower second is here. So this is the lower second, this 20 SMA here on the weekly is the lower second standard deviation for this current 5-day closure. It doesn't mean it's going to remain that way. We would have to update it on this next close. But this is also the lower second or L2 on the 5-day, right? So they have confluence with each other to the downside. That's where more aggressive expansion to the downside would come into play. And then to the top side here, where the all-time high is for the upper third, this is also, an area of interest. So we can say this is the U3 on the 5-day, right? And all we're doing is we're just marking the volatility levels of interest as it relates to the weekly and 5-day now to this daily. And we can see that we have pretty clear areas of interest. Why is this one so much, the font is so much bigger? Like what is going on here? I don't know how I messed that up, but apparently I had the settings might have just been
It might
preset.
just be the universe telling you that that's where it's going.
Yeah, maybe. Especially as Bitcoin just slams down to the downside today. All right, so we have a really clear understanding now of how these things are put together, and that the 5-day and weekly areas of interest obviously are going to be built off of what we're seeing on the daily. And it just so happens that, the 103,400 is also a major fib level. It also happens to be that we have confluence with the 88,700 for Fibonacci levels. So let's go ahead and actually throw those on so we can see that we have clear confluence with levels of interest, volatility, and we're just taking the all-time high from the prior cycle to the bear market low, so 69,000 to 15.5. And when we go and we look at where we have kind of drawn out our ranges and our criteria, we see that this line down here that was white is now blue, but that white line is under there. That is the 88,713. That is a 1.168. That is 16.8% above $69,000. Okay. And then to the top side here, where the upper first is on the weekly, for the volatility level of interest, we have that lining up with a macro Fibonacci extension level at the 1.272. That is at 103,645. So we're now finding confluence for our areas of interest to the downside and the upside. So that means that this is extra important over here, where we have this 1.168, this 88,700 is very, very important. Could it be swung on a lower term time frame like a daily? Sure. But if we start seeing 5 days, weeklies close below there, we're either already experiencing further downside or we're looking for more downside. If we were to come up and look at the top side here, where we have had a few daily deviations above this 1272, where the weekly is currently placed its upper first standard deviation, we have a very clear area of interest there at the 27.2% at 103,650 or so, which means that if price does start to close above there on the daily, we're looking for it to then start closing higher term timeframes, 5-day, and so on and so forth. So the 5-day is going to be something very, very interesting. And actually, where's the upper second on the 5-day? Because the upper second is right here. We should mark that actually. So we'll mark this as the 5-day upper second. It's like right around 105, 300 or so. Yeah. So, and we can even, we can get into the coordinates here and say 105, 300. And we can say this is the 5-day, 5-day upper second. So U2, 5-day. So now we have fully built out kind of our criteria to the upside. We found some confluences, and you'll see that it's actually more dangerous for the bulls to lose this level to the downside, because it'd be losing not only the range lows, but it would be, on expansion on the daily between the, or below the lower second and lower third standard deviation into this zone down here at 88,700. So this would be expansion into a very important area. And if lost, especially on a daily and higher term timeframes, we're looking for further expansion to the downside. So this is a critical level that Bitcoin is holding support at. So if it's lost, probably going in for a retest to the other range, right? That Bitcoin moved up from. To the top side here, we still have a major Fibonacci level to the upper second on the 5-day, which is confluent with the daily upper third. And above there, then we're testing the all-time high zone up here, and potentially higher on any breakout, because this would be full-on expansion on the 5-day on closes above the all-time high, to then go and test 115, and then possibly where the upper third is coming in line with confluent areas of interest from a fib level with the 1414 at $128,000 or so. So we have a bunch of confluences around us, and the only thing that we need to do is understand what's happening within the range now as I drop things on my desk. And that is, what is the trend, right? So we can get rid of the Bollinger Bands. We have confluence with the upper third. We have confluence with the lower third in some key areas of this range. So we have the lower third at the 20 simple and lower second standard deviation of, so 20 simple on the weekly and lower second on the 5-day is where the lower third standard deviation for volatility is on the daily. So we have it lined up there. And to the top side at the extremes at the upper third on the daily, that's lined up with the upper second on the 5-day, and likely going to kick off expansion to the top side. This will likely kick off expansion to either deviate the actual range lows, where Bitcoin can still save itself on the daily, especially if it doesn't close below them, but likely going to be getting expansion down further, right? So we do have, some other criteria that we can place in here, which is like maybe a red line. Like this is the line in the sand for the daily at $85,000. You say this is like emergency for the bulls, and then there's the close open structure in there as well at 88,300 or 87,300 rather. So then we can kind of define this as like this is not a great zone for the bulls to lose. And now we have all of our criteria pretty much laid out to understand what's happening. And then we also have a oh shit zone. And we can even just turn this one blood red. We can get rid of our Bollinger Band set here for volatility metrics. And we can just look at the pure trend in the range. So we have higher lows and higher highs, uptrend, lower lows, lower highs, a little bit of a downtrend, deviation, equal lows to a little bit of an uptrend, and now we're back in a downtrend. So we can now just define what is going to be the criteria for a trend reversal, right? And a trend reversal setup. So first things first, we need to see a low set. There is no low set here, but we do have a lower high. And our last lower high was up here. So we have the higher high up here. We have a lower high, and then our third lower high right here. So in order to break this downtrending structure, we need to see a low set first, and then we need to see a lower high taken out, and then we can start looking further up. as a possibility. So this is actually good for the bulls, that they have a lower high that's a little bit more attainable within the range right now, provided they don't drop too much further. But this would be, the area to watch to the upside for our daily to break the downtrend. So closes above 98,890. You could just call it $99,000 if you like, and we would see the downtrend broken. But first, we need to see a low set, and realistically, because today's candle is dumping off, we can even see that it's lost $94,000. It's going in for a weekly test here, likely $93,500, which is the close open higher low of the weekly. I'm not showing it there. I just know where the closing higher low is. Trust me, bro. It's one of those situations. I can mark it if you want, but it's coming into a pretty major level, and I might as well mark it just so I can show you where I would have you do this on your own chart if I were sitting there with you. There's the close open higher low right here on the weekly. This is at $93,500.
Okay.
And we can
I can trust you, but I appreciate you showing us anyway.
We can just kind of mark this. We'll mark this in purple or something, or I don't know, pink. There you go. It's pink. Now, when looking at where Bitcoin is going into test, we know that this down here is the actual low on the weekly at $89,000, and this is the close open right here at 93,563. So Bitcoin's going in for a weekly test or retest of this higher low structure, currently on the daily, and we need to see a low set on Bitcoin. This isn't going to be the criteria for setting a low. This candle would have to close green and close above yesterday's high in order to set a low. And obviously we don't know how today is going to end, but in this case, we, as it stands for this particular move, we have we have to update this at the end of today, right? So we'll call this, I don't know, I'm running out of colors that I like to use. We'll call this this is teal. So close above yesterday's high at $97,000, then we would see a low technically set. But if this candle closes today anything like this, I would actually still keep that $97,000 personally, but you'd have to look to today's high at 96,730. Closes above there in tomorrow's candle, which is the Wednesday candle, would set a daily low. So if Bitcoin were to close today like this or lower, then it's close above today's daily high. That would set the low. And then we'd look for a possible trend break on any closures above $99,000. So to break that downtrend. So get a low set, then break the downtrend. And then from there, we look for higher low equal low structure, like we were talking about when we were talking about trend and doing trend analysis. So in this case, it's going to look like, kind of looks a little bit like this. We've got, where do I want to start this? We've kind of got this kind of swing trend going on. It's interesting because we got this guy to this guy to this guy to wherever this ends, right? So that's kind of the swing trend. And really what we're looking for is, we did get a higher high, but no closes above it. So I don't really like this area as a high, but you have to mark this swing low here. So it's kind of chop, right? So what are we really looking for instead of, really digging into the swing trend and trying to, which a lot of people do, and then they try to say, well, it made a higher high and this was a higher low, so obviously, this is going to reverse, and then they get dunked on because they're not looking at the closing trend, which the closing trend is going to be a little bit different. You can always use a line chart for the closing trend, right? And line charts aren't even going to be perfect because they actually introduce a little bit of noise there, but you can say, okay, this was the closing trend here, just taking the closes, right? And then we have the it's kind of going a little bit like this. So we have, the closing trend is a very clear downtrend, and we can even get rid of price. Why can't I get rid of price? Actually, no, I can. There used to be a little eyeball for this. Oh yeah, hide. So you can see on the closing trend here, we had this closing uptrend. We had closing equal lows, lower high, lower low, lower high, lower low, right? And we need to see this lower high in a close to that green line up there at $99,000 be reclaimed by the bulls, as it's the last important closing lower high. That would break the trend. And then we're looking for something like so. We'd be looking for something like this. And then we're looking for higher lows or equal lows. So either here, and then we look for a new trend to form. So essentially, we're looking for something like price to break this downtrend, right? With a higher high, put in higher lows, and then higher highs again. That's your trend reversal setup. And then you look for continuation on the next higher low to higher high. And equal lows are acceptable. So this would also be acceptable as well. Break the downtrend with a higher high, come in for a higher equal lows, and then come up and take out that new higher high that was just created. And you've got a trend reversal set up to possible continuation of trend to the upside. And it's all within the context of this wider range. And realistically, most people spend too much time in the range trying to figure out what is happening. And it just takes a little bit of zooming out to understand what's happening as it relates to these movements on the daily. And every time Bitcoin moves to the downside, alts and meme coins are getting killed because many are betting too big in those markets, in particular on leverage for the leverage traders and exchanges, on leverage traded exchanges here. And every time Bitcoin, I guess I kind of, I've started whenever Bitcoin sneezes to the downside, alts and meme coins take a shit on themselves. That's because people are over leveraged and overexposed and get scared out of the markets when Bitcoin is threatening downside. They get euphoric when Bitcoin is headed to the upside. Realistically, it's just building out a bigger range here. So understand that it still comes back to trend, support and resistance, the volatility, which we focused on a lot today. And then all of that creates momentum. And we'll kind of leave off with momentum. And I like a regular stochastic momentum indicator. I get a lot of questions about the ones I use. As many of you know, I'm a big fan of the developers that Crown has put together. And that's Crown's Crypto Cave. It's not Crown's Crypto Cave anymore. It is Eric Crown Crypto. He's got like KVDB and Caretaker and a bunch of others that have created really good products for him over the years. There's this stochastic momentum indicator. I'm not trying to sell you on it, by the way. It's got extra stuff on it that I don't explain, but I use for me. You don't need to pay for an indicator for that. I chose to support Caretaker because he allowed me to pilfer some of his code for my free indicator that I offer to everybody here. And in this case, you can get a free regular stoch momentum indicator, and trend, support, and resistance and volatility create momentum. And we can kind of take a look and say, okay, well, where would momentum potentially shift as kind of the last piece on the daily here? And that'd be on closes back above 96,150. And of course, Bitcoin trading around that weekly at 93.5 right now. So threatening downside right into that weekly close open. And how does that relate? Excuse me. How does that relate to the 5-day? We can take a look at momentum on the 5-day and we can see closes above 103,900. So basically $104,000, which is a big daily overhead area of resistance. That's actually the December 5th high. So that big candle from December 5th where it hit 92. It also hit 104 on the top side. So this looks as though, it's still downward pressure in terms of momentum within this range. But Bitcoin is headed into support structures right now. So front running the breakdown of those support structures is very dangerous for those that are bearish right here, because realistically, if you were going to be bearish, you play the range at the highs on the short side and you play the range at the lows on the long side until one side breaks, essentially. That's not financial advice. That is a trading strategy for trading ranges. So I would expect some bidding to occur as Bitcoin continues to test its major areas of interest to the downside in this wider range. But it looks as though pressure is on to the downside a little bit more here on the 5-day. Same goes for the weekly at 105,350. But remember, everything has to start on the daily. Momentum is still down. So what are the criteria we're going to look for? Next, we need to see when and where a daily low is going to be set. And then once a daily low is set, we can then reference, okay, now that a low is set, is momentum starting to shift? In this case, for a regular stochastic momentum indicator, closes above 96,140. Well, if a low was set today, based on our criteria, 96,140 is the momentum shift in stochastic momentum. And let's say, to set a low would be above today's candle, right? So, and that's at 96,730. So if we were to see a low set, we would also see momentum begin to shift back to the upside here, at least initially. And then the additional criteria would be to see the downtrend break on closes above $99,000. And that's really all I got for you, Peace, unless you have any questions. I know that we're about 9 minutes out from the next show. So we do have a little bit of
I think it's very interesting stuff. I followed it all. I don't know that I'd be able to reproduce all of it on my own, but I'm gonna try. When next time I get to sit down and start charting. But I understand it all. Like, it all makes sense to me. Basically, we're hoping we don't go much lower than we are today, and maybe tomorrow we can pop back up over that 96 number and set a high,
set a low,
set the
set
low,
a daily low. Yeah,
right. Set the daily low, and then also maybe that would also see the momentum shift back going up.
Yeah. On the for the daily, the big thing is to remember, though, is it's still a downtrend, even if it sets a low. So we need to see that downtrend broken, right?
Oh, right. So then you would need to set a higher high.
Yes, and that would only come in now above $99,000 as it currently stands.
Okay, right. So it still would be, so the first step would be to set that low. The next step would be to set a higher high, and that would be the trend break.
Yep.
And until then, we're still just chopping at best.
Yep, we're in a downtrend to the bottom side of the overall range in a consolidation environment that the 5-day is going to probably tell us the story of pretty shortly. I would say in the next this 5-day period is going to end in where's my 1 day 6 hours. So what's today, Tuesday? So after today, it's going to be at the end of Wednesday's candle. So Thursday we'll have a new 5-day candle, and I would say in the next 10 to 15 day period, we're likely going to see Bitcoin starting to indicate which direction it's going to go, provided it doesn't break down or break out before then. I would say, though, the next 10 to 15 days are going to be important for price action.
Yeah, that I think we're all kind of we all kind of are hoping and praying that things kind of just turn around, because
I don't want to be the bear in the room, but last year when I was saying this for a while, the first to second quarter transition. So first quarter of the year to second quarter of the year is very, very important for markets in general, and in crypto markets in particular. We do. I've said this before. There is the danger that we play out a very similar situation to what we saw in the first to second quarter of 2021. So that is not confirmed. Obviously, we're laying out the criteria to watch, right? But we need to see the bulls get up off their asses and try to move back up to the outside of this range fairly soon, in my personal opinion. The longer that this kind of goes on, the more downside risks there are on the table. And that doesn't mean that the bull market is done, by the way. That is just that there's more downside risks on the table. March timeframe is very, very important. So this next 5-day period end, and then possible next 2 to 3 candles, so 10 to 15 days for the 5-day, are going to be very informative as to what we should be looking for on the weekly. And I want to encourage everyone, do not be afraid of downside. Downside is good in this case, because we are in an overall uptrending structure for something like Bitcoin on longer term timeframes, like the monthly.
What is on the longer term, like on the monthly? What's the number that we would have to lose in order for it to be problematic?
Okay, so let me go ahead and wrap all this up on this chart here. We're just gonna call this. We'll just call this Chop because it's the name of the episode. All right, so let's get rid of this and just very, very simply look at Bitcoin on the monthly. We don't even need bands for this. And this is easy, easy, easy. So we are in an uptrending structure. So, we have the lower low, we have a higher low, and then we have another higher low. So in order to break structure, first off, we would need to see this monthly put in a high, which would be a higher high. And if it were to start to transition structure from here, it would have to take out the lower low. Now, I will tell you that it would be dangerous if it took out the closes at $58,900, almost $59,000. So you don't want to see it trading back down towards that. I know some do, but that would actually start to endanger structure. But it's really about losing that $49,000 low. That is the last higher low in the monthly. So the only way that I see this potentially playing out, there's a few ways, but the only way that I see it playing out bearishly would be to come here with this uptrending structure, put in a high, come down with a higher low, and then lower high, and then take out that lower low. Where the next lower high, let's say in this example, comes in right here. That's where you have your structural breaks, is a lower high that takes out the last higher low, and we've got a trend reversal. That's the setup that I would be, looking for from here if I was bearish, and I'm not bearish. So even though a lot of people accuse me of being a bear because I'm making people very aware of the downside risks, those downside risks are, for me, in the context of a bullish structure. So that usually, for someone like myself, not financial advice, it presents opportunity. And that's where I could potentially see issues longer term. And again, this is a monthly. It takes a while for this stuff to play out. Right. More likely, we could also just see a flattening, right? This just goes sideways for a little while on the monthly, right? In a bigger consolidation structure on the monthly, and then just kind of goes sideways and then starts to leg up, right? So we could very easily see that just locally as well. Wicks be damned, they can land anywhere, but look at this monthly just in terms of the closes. on a line chart, and we had a nice up move, sideways, little bit of a lower low close, boom, up, sideways, a little bit of a lower low close, boom, up. Could we be doing the same thing, sideways and then a little bit of a lower low close and then boom, up, but still all uptrending structure since we had this higher low come back in here at around $25,000.
So the long and the short of it is, even if it loses that 89, 88, 7, whatever range, it's not, oh no, the bear market, we're all done and we're going back to 40K and we're never going to get back over 100K again until like 2 years from now.
Everybody be back calling for $10,000 and $12,000 downside targets and like all kinds of stupid shit. Yeah. Right. And it's just not even, there's a whole host of reasons why, but maybe we'll get into that more macro conversation next week, because I think next week, what do we have? Next week, we'll have the end of the month on Friday next week. So we can always talk about a little bit more macro and kind of prep everybody in the audience for what to look for in that February into March candle.
My God, the month's over in a week and a half.
Yep. And we're right at 11, my friend. I want to thank you for having me on, as always. I really do appreciate it.
Man, I love having you on. I've been missing having that education too the last couple of weeks, but I know you were busy 2 weeks ago. I wasn't feeling it anyway. I was a little overrun myself. So always good to have a break, but I love having you on here, man. This is great stuff. Thank you for bringing this to our audience. Thank you to everyone that tuned in. As always, Landy brings us some amazing stuff. We do have on the QR code there is a link to the Landy bands. That's a free indicator set built out by Landy himself. So go check that out. It's also, there's a link in his X profile if you need it. And Landy, man, you thank you again. You're an excellent dude. I consider you a good friend of mine, and we love having you on here. So thank you for giving us your time today, and we'll catch you around soon.
All right, buddy. Well, you take care. Thank you so much. Peace.
Yeah, thank you, man. And everyone, tune in to the Art on Stack Space happening right now, hosted by our good friends Reese, Swanapool, Kev, GPSC, and 300 is actually joining their group now. So the three of them are going to bring us all the information on what's going on in the art world on stacks. Check them out. And thank you for joining us today. I am Peace Love Music. We are DeOrganized Media, coming at you live on Bitcoin Live Decentralized Broadcasting. Y'all have a blessed day. Thanks, Landy.